Naples, Florida. A place that looks untouchable. Palm trees, ocean views, quiet streets where money doesn't shout, it whispers. For years, Naples sold a promise, not just of luxury, but of certainty. If housing markets struggled elsewhere, Naples stayed calm. If prices fell in other cities, Naples held firm. It became the place people believed was immune. But here's the uncomfortable truth. Markets don't break when everyone is watching. They bend when everyone feels safe. Right now, Naples is sending signals most people are missing. Home values peaked quietly, and then started to slide. Inventory is rising. Homes are sitting longer. And nearly 9 out of 10 properties are now selling below asking price. Not because something exploded, but because something shifted. This isn't panic selling. This isn't a crash headline. This is hesitation. Buyers are pausing. Sellers are adjusting. And the confidence that once defined this market is being tested silently. Here's what makes this moment dangerous. Naples doesn't fall all at once. It fractures. One neighborhood bends first. Another resists. Luxury masks pressure until it can't anymore. And by the time the change becomes obvious in the headlines, the real damage is already done. To equity, to exit timing, to people who trusted the old story. So the question isn't whether Naples is still desirable. The real question is this: are you looking at Naples as it was, or as it's quietly becoming? Because in this video, we're not talking about hype. We're breaking down the numbers, the hidden risks, and the signals that tell you where this market is actually heading before it forces a decision on you. And once you see them, you won't be able to unsee what's happening beneath the surface of Naples, Florida. Naples doesn't need to announce itself. Its reputation has already done that for decades. This is the kind of place people associate with permanence, with quiet wealth, with the idea that some markets simply operate above the noise. Palm-lined streets, gated communities, ocean views, all reinforcing the belief that Naples exists in a different category. And that belief shaped how people behaved here. Buyers didn't come chasing bargains. They came chasing certainty, a lifestyle that felt insulated from volatility. When other Florida markets overheated, Naples felt measured. When prices corrected elsewhere, this city appeared to hold its ground. That perception became part of the value. Because in real estate, confidence is a multiplier. It sustains prices, shortens decision cycles, and convinces buyers that waiting is riskier than acting. For years, Naples benefited from that psychology more than almost any other city in the state. But here's the subtle shift most people miss. Markets built on confidence don't send loud warnings when conditions change. They send quiet ones, small deviations that don't match the story everyone keeps repeating. Signals that only matter if you're looking for them. And Naples is one of the most closely watched housing markets in Florida right now. Not because something has already broken, but because something underneath the image no longer behaves the way it used to. Especially once you move past reputation and start looking at what the numbers are doing in real time. For a long time, the number itself felt like proof. According to the most recent data, the average home value in Naples sits at $540,544. Not a symbolic number, a real one. The kind that quietly reinforces the idea that this market plays by different rules. But that same number carries a second message. Compared to 1 year ago, average home values in Naples are down by 7.3% year over year. Not a crash. Not a headline-grabbing collapse. Just a controlled retreat. The kind that's easy to ignore if you're not watching closely. And the pressure becomes more visible when you look at what homes are actually selling for. While the average list price remains around $660,000, the typical home is closing closer to $523,000. That gap isn't theoretical. It means buyers are negotiating and sellers are conceding in a market that's supposed to be immune to pushback. At the same time, inventory is building. There are now 5,825 homes actively listed for sale in Naples, with more than 1,128 new listings added recently. That's not a shortage. That's supply quietly testing demand. And when prices soften, negotiations widen, and listings accumulate all at once, the real question stops being whether something is changing, and becomes where that change is showing up first. Because once you break Naples down neighborhood by neighborhood, the numbers stop telling a single story and start revealing a market that's splitting beneath the surface. Naples doesn't move as a single market, and the numbers make that impossible to ignore. When you break the city down by neighborhoods and zip codes, the differences become striking. In areas like Old Naples and Park Shore, where home values often exceed $1,200,000, prices have softened only slightly, declining closer to 3 to 4% year over year. These neighborhoods still lean on scarcity, prestige, and long-established demand. But move just a few miles inland, and the story changes. In parts of North Naples and East Naples, where average home values sit closer to $400,000 to $500,000, price declines have reached 8 to 10% compared to last year. That's not seasonal noise. That's meaningful movement, especially for a market built on stability. Even more telling is how uneven the adjustment has been. Some zip codes are still seeing homes sell within 30 to 45 days, while others now sit on the market for 60 to 90 days or longer. Same city, same headlines, completely different outcomes. This kind of divergence doesn't happen by accident. It suggests that certain neighborhoods are absorbing pressure faster, whether from insurance costs, HOA fees, flood exposure, or buyer affordability, while others are temporarily shielded by perception alone. And when a market starts splitting like this, the question is no longer if prices will adjust, but which areas are next, and how quickly the gap between them begins to close. What makes this shift in Naples unsettling isn't just that prices are moving. It's how far they've already moved in certain pockets, quietly, without triggering alarm. In several Naples neighborhoods, recent data shows home values down by 9 to 10% year over year. In practical terms, a home once valued at $600,000 is now closer to $540,000. Not because it suddenly became less desirable, but because the market around it changed faster than expectations did. Meanwhile, other nearby areas show declines closer to 2 to 3%, creating a growing imbalance inside the same city. Two homes, similar size, similar location, very different trajectories. That gap matters. Because price drops don't spread evenly. They migrate. They move through the areas where buyers hesitate first, where carrying costs rise, where insurance premiums jump, where maintenance and fees begin to outweigh lifestyle appeal. And once discounts become visible, they don't stay isolated. They reset expectations. Buyers who see 10% price cuts in one neighborhood don't offer full price in the next one over. Sellers who watch comparable homes close lower begin adjusting, even if they don't want to. That's how pressure travels through a market like Naples. And the moment that pressure meets a growing number of listings, the balance between supply and demand starts to shift in ways that numbers alone can't fully explain. But inventory can. Inventory is where the story in Naples starts to get uncomfortable. Right now, there are approximately 5,825 homes actively listed for sale across the Naples market. That number alone might not sound alarming until you place it in context. Compared to earlier periods, available inventory has climbed steadily, signaling that more owners are testing the market. At the same time, buyers are becoming more selective. Even more revealing is the pace of new listings. In a recent 30-day window, more than 1,128 new homes were added to the market. That means supply isn't just sitting. It's arriving continuously, week after week, creating quiet competition among sellers who are all aiming for the same shrinking pool of qualified buyers. As inventory rises, days on market stretch with it. Homes that once sold within 30 days are now taking 60 days, 75 days, sometimes longer, especially outside the most insulated luxury enclaves. Each extra day chips away at leverage, forcing subtle price adjustments that rarely make headlines. And here's where inventory becomes more than just a statistic. Because when more homes are available than buyers are willing to absorb at current prices, the market doesn't freeze. It negotiates. It bends. It recalibrates. Which leads directly to the growing gap between what sellers want for their homes and what buyers are actually willing to pay. The tension in Naples becomes impossible to ignore once you compare asking prices to real outcomes. Right now, the median list price across the Naples market sits near $660,000. That's the number sellers hope represents value. But the median sale price tells a different story, one closer to $523,000. A gap of more than $130,000 between expectation and reality. That difference isn't cosmetic. It's structural. It means buyers are no longer accepting prices at face value. Offers are coming in lower. Concessions are becoming normal. Price reductions are quietly spreading across listings that once felt untouchable. And every closed sale at a discount becomes a new comparable, resetting the baseline for the next negotiation. What's especially revealing is that this gap isn't driven by distressed sellers. It's driven by hesitation. Buyers are pausing, calculating carrying costs, insurance premiums, HOA fees, and long-term risk before committing. In other words, the market isn't panicking, it's reassessing. And when reassessment becomes widespread, pricing power shifts away from sellers faster than most people expect. But the real twist appears when you look at which segments of Naples are still commanding premium prices, and which ones are starting to lose that privilege first. Not all of Naples is reacting the same way. And that contrast is part of the illusion. Along the coastline and inside legacy luxury enclaves, homes are still commanding premium prices. In neighborhoods where properties regularly list above $1,200,000, price declines remain limited, often closer to 2 to 3% year over year. Inventory moves slower, but it still moves. Scarcity and status continue to shield these areas for now. But that protection comes at a cost. Luxury buyers are increasingly selective, and even small shifts in confidence ripple outward. Homes that once attracted multiple offers now require price adjustments, extended marketing periods, or seller concessions to close. A property sitting unsold for 90 days or more in a premium area quietly sends a signal to surrounding markets. Meanwhile, just outside these enclaves, mid-range neighborhoods feel the pressure sooner. Buyers who see million-dollar homes negotiating downward become far less willing to pay full price for properties listed at $500,000 or $600,000 nearby. This creates a false sense of stability, because as long as luxury sales continue, the broader market appears healthy. But beneath that surface, momentum is shifting, not collapsing, but redistributing. Value is becoming conditional, not assumed. And when price strength depends on perception rather than volume, The next indicator that matters isn't price at all. It's what's happening on the demand side, especially in the rental market. The rental market in Naples adds another layer to this picture, and it's more revealing than it looks. Right now, the average monthly rent in Naples sits around $2,700. On paper, that still places the city above the national average. But the trend matters more than the number itself. Rent growth has slowed noticeably, and in some segments, it has begun to flatten or edge downward. That shift changes the math. For years, rising rents justified rising home prices. Investors could point to strong cash flow. Buyers could rationalize high purchase prices by comparing them to equally high monthly rents. But when rent levels stall while ownership costs continue climbing, insurance, property taxes, HOA fees, maintenance, that equation starts to break, especially in a market like Naples, where many buyers aren't full-time residents. Seasonal demand, short-term rentals, and second home usage all depend on the assumption that rents will remain strong enough to offset carrying costs. When that assumption weakens, hesitation follows. And hesitation doesn't show up in headlines. It shows up in fewer offers, longer decision cycles, and softer negotiations. Which brings the market to an uncomfortable crossroads. Because when renting no longer feels like a clear alternative, and buying no longer feels like a safe bet, buyers and sellers are forced into a standoff. And that standoff leads directly to the phase of the market most people misunderstand. The moment when activity slows, not because prices are falling fast, but because nobody is certain what comes next. This is where Naples enters its most misunderstood phase. Right now, the market isn't collapsing, and it isn't rebounding either. It's negotiating its identity. Buyers are active, but cautious. Sellers are motivated, but hesitant. Transactions still happen, yet with far more friction than before. Homes that once received offers within 15 to 20 days are now sitting for 60, 75, even 90 days before meaningful negotiations begin. Price reductions aren't dramatic, but they're frequent. Small cuts, then another. Then concessions quietly added to keep deals alive. At the same time, buyers are no longer rushing. With mortgage rates hovering near 7%, affordability calculations have changed. A difference of $50,000 in purchase price now translates into a meaningful shift in monthly payments, insurance exposure, and long-term risk. So instead of bidding wars, the market is seeing pauses. Buyers wait for confirmation. Sellers wait for better offers. Both sides watch the same listings and notice when they don't move. This creates a freeze that looks calm from the outside but feels tense on the inside. A market where decisions are delayed not because people lack interest, but because timing suddenly matters more than enthusiasm. And when timing becomes the dominant force, the final question isn't about prices at all. It's about whether Naples is heading toward a temporary adjustment or crossing into a fundamentally different chapter altogether. Naples isn't collapsing, but it's no longer protected by the story it used to tell. What the data reveals isn't a dramatic crash. It's a transition. A shift from a market driven by confidence and momentum to one shaped by caution, selectivity, and long-term risk awareness. Prices are adjusting unevenly. Inventory is testing demand. Buyers are negotiating instead of chasing. And sellers are slowly realizing that yesterday's assumptions no longer apply. A city once defined by effortless appreciation is now being redefined by who can afford to stay, who needs to sell, and who is willing to wait. That doesn't mean Naples loses its appeal. It means value is becoming conditional. In a market like this, the biggest mistakes aren't made by those who act, but by those who rely on outdated narratives. Because the future of Naples housing won't be decided by headlines or hype. It will be decided by infrastructure, affordability, insurance costs, demographic shifts, and buyer psychology moving quietly beneath the surface. And those forces don't announce themselves until it's too late. If you want to understand where this market is actually going, not where people hope it's going, that's exactly why this channel exists. Here at Housing Intel, I don't sell optimism. I analyze risk. I expose the forces most buyers never see. And I help you understand the housing market before it forces a decision on you. If this kind of analysis matters to you, subscribe to Housing Intel. Because in the next phase of the housing market, information isn't optional, it's protection.